This is Bix Weir with RoadToRuta.com. Today we're going to talk about the perfect storm for gold, silver, and Bitcoin. It's all converging right now. Unbelievable amounts of things that are so pro-gold, pro-silver, and pro-Bitcoin, and anti almost every other asset class. It's unbelievable. Let's go through a list of the issues and major problems that are hitting us as of starting tomorrow, really. Starting tomorrow, the debt ceiling will not be increased in the United States. I know a lot of people are saying, well, it doesn't matter. They do this every time. Well, they don't do it every time when everything else is falling apart. They do this every time in the past, yes, because the idea was not to get the debt under control. The idea has always been to run the debt as long and hard as possible. As long as everybody continues to take the unbacked fiat money, keep running that debt longer, harder, and faster. It was what Ruta wrote in the sand in the 1982 comic from the Federal Reserve, Wishes and Rainbows. It was an asset allocation formula called On the Road to the Golden Age. And the conclusion of that economic formula is run the system as long and hard as possible, soaking up all the benefits of unbacked fiat money, build your roads, build your infrastructure, build real estate, and then crash the system. So the debt ceiling limit not being increased is a big deal. It is a very big deal, and it'll cause major chaos in the months to come, weeks and months to come. And then right on the very same day, the Federal Reserve is going to raise rates. Supposedly, they're saying there's a 95% chance that they will raise rates because they are pretending that everything is fine. They are pretending that everything is fine to keep the game going. And when they pretend that everything is fine and they raise rates like a half or a quarter%, tiny amounts, and they continue to buy distressed assets, continue to pump money into the system, you end up with stock and bond market bubbles, which is where we are right now. Stock market's never been higher. The bond market's never been bigger. We are in bubble city, my friends, right now. And not only is there stock market bubbles and bond market bubbles around the world, there is a gigantic sovereign debt bubble. This is the mother of all bubbles because it is the debt of nations. And when the debt of nations starts imploding like it is right now in Europe, you have a huge problem because either they print more money or go begging to the EU. The United States can print its own money. The European nations cannot. Unbelievably, they gave that power to the European Union, which is using it and flaunting it and abusing it. And countries like Italy and France and Greece are all starting to wobble. And they can't believe how they got themselves in this situation. But it's their own doing. They should have thought it out. They should have known that once you give up the power to print your own money and control your own money, you are at the whim of whoever has control. Was it Rothschild that said, give me power and control over the money? I care not who writes the laws. That is exactly what's going on in Europe right now. And as a result, there is a European Union crisis. The entire union will likely split up this year. Imagine what that will do to the stock market, the bond market, the derivative market. Massive derivatives were written on European debt. The Brexit is going forward, and there's no way to stop that. Italy's ready to walk out. Greece is ready to walk out. Turkey has just decided to renege on an agreement they set up with the EU where they'd hold 2 million refugees, migrant refugees that are going to be flooding into Europe. Can you imagine the chaos that would cause? That's happening right as we speak. And ultimately, the government authority is decaying quickly. You can see it in the United States with the fights between the left and the right, the Trump versus Obama Clinton machine, and everybody is losing faith in everything on all sides of the aisle. The European governing authority, the EU, Nobody even believes they're allowed to make these rules and laws anymore. So the people are starting to stand up. So all this stuff is coming together at the very same time that these major, major bubbles, and I call them bubble funds. There are trillions of bubble funds that will be looking for a home very, very soon. For example, the global bond market bubble is $100 trillion. The global stock market bubble is $70 trillion. The global real estate bubble is $250 trillion. These are all investment funds that have gone into these markets because they were looking for a place to sit, looking for a place to put their money. So I call them the bubble funds, and the total bubble funds now with nowhere to go because everything's a bubble is $420 trillion that will be looking for a home. And when things get chaotic and things get ugly, we get down to the last resort asset classes, gold, silver, and the new entrant, Bitcoin. And these are portfolio financial insurance. These are insurance assets that you don't need them until you need them, and that's the key. And if you talk to like professional fund managers and things like that, they'll say, oh, you don't need much of gold, you don't need much silver. They don't know anything about Bitcoin. But in times of stress, they were taught you need about a 5% allocation in assets like gold and silver. 5% allocation. Remember that number, 5% allocation. Of the 420 trillion in bubble funds, 5% allocation would be 21 trillion of financial insurance assets. Clearly, right now, we're in times of financial stress, so 21 trillion should be invested in these types of assets, gold and silver, and I'm going to throw in there Bitcoin because it is a new financial insurance that very soon a lot of people will be waking up to, and a lot of this money is going to flow somewhere. So let's look at what happens when the money flows into even the conservative side of financial stress, the 5% allocation. For gold right now, we're in a 5-year artificial bear market that is bottoming. In 2011, they artificially rigged the price of gold when it was starting to break out towards $2,000. They have rigged it with computers and derivatives, creating a bear market with computers and derivatives. This isn't a real bear market. This wasn't freely traded buyers and sellers. This was controlled manipulation by the Federal Reserve and the U.S. Treasury using computers and derivatives. But right now with gold, there's in-ground reserves of about 56,000 tons, and that comes out to 1.8 billion ounces of gold. But the investable above ground supply is 180,000 tons according to the mainstream. Now, I don't believe the mainstream, but we're going to run with that right now. It's about 6 billion ounces of gold that's investable. Remember, gold is pretty much all investable. It's all above ground. It's all hidden in vaults and in jewelry. Those are the two biggies when it comes to gold. Practically all the gold in the world is still above ground in investment form. So the current gold market cap is 7.2 trillion, which represents 1.7% of the bubble funds, the $420 trillion in bubble funds. So if you put 5% allocation into gold, the price of gold should be about $3,500 today. Now that is if all the insurance type allocation of 5% of the bubble funds went into gold, we should be looking at $3,500 per ounce gold price. Now, gold people would probably say, wow, that's great. You know, gold is trading at $1,200 today. My investment is very much undervalued, which is true. It is undervalued, and it should rise to that level based on the bubble funds. But as an investor, you want to get your money in the best place for what's coming down the pike. And we know there's economic chaos coming down the pike. You want to get your funds into assets of last resort, financial insurance type assets. So yeah, gold would be a good place. Now, I think gold is a good start, but we want great things from our portfolio. Let's take a look at what would happen if the asset allocation gets thrown into silver. First of all, silver's been in that same artificial bear market since 2011. It is bottoming. This was completely created by the market riggers at the Federal Reserve and the U.S. Treasury. It is not real. Silver should be booming right now instead of trading at $17, which is, what is that, 30% of its all-time high? Crazy, crazy numbers when gold's well over its high from back in the 1980s. That's another story, but let's just look at what if 5% allocation went into silver. First of all, there's in-ground reserves of about 570,000 tons or 18.2 billion ounces. Now remember, we consume close to 1 billion ounces every year in electronics and solar panels, all that stuff that we break silver down into little tiny bits and it's never recovered. So in actuality, in contrast to gold, which is there's 6 billion ounces that's been mined and is still available for investment, in silver, there's only 2 billion ounces available for investment. That's investment silver because everything else is either being used in electronics or has been used in electronics and never can be recycled because it's in the tiniest bits within our flat screen TVs and our cell phones that are been thrown away in the junk heaps of the world. So let's look at the current silver market cap. Right now, the silver market cap is only $34 billion. That is 0.008% of the bubble funds. And remember, we're looking for financial insurance in the amount of 5%. If all of that insurance from the bubble funds went into silver, that would put silver at a price of $10,500 per ounce. $10,500 per ounce. That is just doing the math. And it is amazing that people are not waking up to this fact that silver's so massively suppressed. The price has been so massively held down for so long. It is so distorted. And the moment that people wake up and know that silver is one of those last resorts asset classes, billions, if not trillions of dollars will start flowing into physical silver. So that's silver, and let's look at the new entrant on the block as far as last resort asset classes, Bitcoin. Yes, I said it, Bitcoin. What if 5% allocation for the bubble funds went into another last resort asset, Bitcoin? Now, I don't know if you know it, but Bitcoin has been in a 2-year bull market. A strong and steady bull market. The people who say, oh, Bitcoin's too volatile have not been watching the price of Bitcoin for the last 2 years. Yes, it's gone up greatly. Strong and steady. There's been many reasons to slam the price down, to forget about Bitcoin, as there always is, but it's been strong and steady, and it continues on an upward path. And the availability of Bitcoin. Right now, there's 16.2 million Bitcoins that have been mined, and Bitcoin is a fixed supply of 21 million that can ever be mined. Now, it gets harder and harder to mine Bitcoin as time goes on, so they're estimating that the time of the last Bitcoin that will be mined is around 2140. That's the year 2140. So Bitcoin will be continued to be mined for over another 100 years. Now, fixed supply. When people tell me, oh, there's unlimited amounts of cryptocurrency, there aren't unlimited amounts of Bitcoin. It's like saying, there's unlimited amounts of gold because there's silver and there's copper and there's zinc. Bitcoin is Bitcoin. Dogecoin is Dogecoin. Ethercoin is Ethercoin. They're all different cryptocurrencies, just like there are different metals. So Bitcoin has a fixed supply of 21 million coins that will ever be mined. Now you can break it up into smaller and smaller units, like Satoshis is a millionth of a Bitcoin. And we will be doing that in the future. Bitcoin supply dynamics compared to gold and silver, Bitcoin is by far superior because it has a fixed supply. Gold and silver do not have a fixed supply. They can always find more gold and you can always find more silver. And those people who say, oh, well, there's just a certain amount that's ever been, made and is inside the Earth's crust, I don't think that's true either. I do think that new elements are being created in the center of the Earth. That's a different discussion. Anyway, the reality is that Bitcoin has a fixed supply and gold and silver do not have a fixed supply. You can go mine, they're even talking about mining gold and silver off asteroids. So there is no way to fix the supply. And they lie so much about how much gold and silver are out there that we'll truly never know. We will always know how much Bitcoin that can ever be mined, 21 million coins. So here's some amazing math for you. The current Bitcoin market cap is $20 billion, which represents 0.005% of the bubble funds. Now, if you allocate 5% of those bubble funds to only Bitcoin, not gold and silver, here's what you come up with. $1.3 million per Bitcoin. And that's only allocating the financial insurance of 5% of the bubble funds that are currently available. If just the 5% went into Bitcoin as insurance for the system falling apart, Bitcoin would be $1.3 million per Bitcoin. Write that number down. We will hit that number one day. We're not going to hit it today. We're not going to hit it in the next couple of years. But we will hit that money, I believe, in the next 5 or 6 years. That's how crazy this is. Because as Bitcoin gets more and more recognized as a very, very important tool, financial tool and economic tool to be used going forward, there'll be more and more money flowing into Bitcoin, especially because of all the other bubbles that will be popping in the very, very near future. So why are gold, silver, and Bitcoin so undervalued, so massively undervalued? Well, gold, it's all about price manipulation. And the price is being manipulated by the major holders of gold, the governments mainly, for control of the unbacked fiat monetary system. That's why the price of gold is always held in check. It's because the unbacked fiat system needs to stay in place to maintain control over the system. Silver, on the other hand, has massive price manipulation by non-holders, and that's for survival. Silver is the death knell for the banking system. That's why the banks like JP Morgan, HSBC, Deutsche Bank have to massively manipulate the price of silver and keep it down, because silver is another barometer, along with gold, of the financial system, of the viability of the unbacked fiat monetary system. If silver starts going crazy, everybody's going to call into question the ability of our monetary masters to control the system that they invented, the unbacked fiat monetary system. And Bitcoin is the newly discovered value recognition by all of humanity. Bitcoin is a baby. It is just a little baby. It's been around since 2009. It will be around for 100 more years. And that's what people are going to wake up to. And the utility of Bitcoin in using it on your phone for transactions peer-to-peer without going through a bank, unbelievable what it can do for humanity. If Greece went on to a Bitcoin standard when it was messing with the EU, when it first crashed, they would be the richest country in the world today. But they didn't. They went back to the EU for another bailout, and now they're in just as much trouble. Bitcoin can save humanity. Save humanity. And by the way, while all this is happening, it is those people who get in first that will reap the rewards of this very, very, very important tool for the future of humanity. Well, that's what I have to say. Gold is good. Silver is amazing. Bitcoin is off the charts. Now, if you guys want to get free email updates, go to roadtoruta.com and sign up. But also, with every time you sign up, you get a free book. My first book, Silver, Gold, Bitcoin, and God. Talks a lot about the things we talk about in here and more, about the changes that are happening and what is happening to humanity. So make sure you go to roadtoruta.com and sign up for the free emails. This is Bix Weir with roadtoruta.com. Make sure you subscribe to this YouTube channel and like the videos and share them with your friends. Let's get this word out that the world is changing and you want to be ahead of the curve with your investment decisions as the world changes.